Summit continues today with Carrie Firestone, her picks for 2022. Carrie, I'm going to run you through them here. Let's talk AUTODESK. That's your first pick, ADSK. Why?
Very poor performer last year, and it's a tech stock, but it's one that we're going to see positive bookings relative to last year. Makes it unusual for some of the software companies, and we think about their strength in the design field, commercial real estate. They're doing lots of restructuring of office space because of working from home and new configurations. We think it sets it up for AUTODESK to have a very good year in 2022.
Okay, we'll watch ADSK. HEALTHEQUITY, HQY. Why'd you pick this one?
Okay, so that's another stock that was down big last year, down 50%, and it's a health savings account company, leads in that field. Very poor dynamics with people falling off of the employment ranks last year. Now they're coming back. We're back to under 4% unemployment. That's very good for health savings accounts. Interest rates are real positive for them as well. And when people start to commute, that's a small part of their business, but will be very positive when people start to commute again into cities.
Okay, so you point to two stocks that had disappointing 2021s in AUTODESK and HEALTHEQUITY. One that did not performed really well is the CME group. It was up 25% last year. It's your third pick this year. Why?
Yes. Well, that 25% was good, but it did underperform financials. Interest rate platform is a very big part of CME. As rates go higher, that builds their business. The last time we saw Fed hike rates, it was incrementally extremely good for CME. So it's a defensive financial. It's a growth stock. It also plays as a platform for cryptocurrency trading. They're not involved in it themselves, but you can play every side of financial trading with CME, and it's a positive. So we like it this year.
You call your own sector pick controversial because it's tech, but you also exclude Apple and Microsoft in the way that you're thinking about this. Tell me more.
Yeah, well, we think that Apple and Microsoft, plus, Google, great years last year. They make up a lot of the S&P, but we don't think that as a group they'll be outperforming the way they have. So if you can say, I like technology, but excluding those, that's a little controversial because it's taking out the biggest factors in the field. I mean, Google is technically not. It's in communications. But there are many companies, and think about Visa and AUTODESK and some of the large tech names that did not perform, skyrocketing last year. We think that they'll start to really outperform. They're not affected by supply chain as much. They don't have the labor issues because they already pay high labor costs. And the growth is continuing. They are continuing to show strong demand for all types of hardware and software products and services like a CRM. And so that's where we would pick. I mean, everybody's talking about financials, energy, and industrials. And I just thought it's great to pick a different sector, which we believe in.